Good evening. Nothing in response? Thank you. It's a privilege to be on the CXXO stage amongst so many of you, both men and women. Good to see you all, but I could do with a little more energy in the room. Or all tired after the 2 days. But okay, let me start with a question, at least I have asked through life, and I think a lot of us have asked at various points, whether in a boardroom, to a friend, or a financial advisor. Why is finance so difficult? Why does moving money or accessing credit or simply understanding a financial product often feel like navigating a labyrinth? Let me share an example from my own life recently, which hopefully can get some of you off your phones. I was looking to buy a car, and I had a plethora of options on financing thrown at me. My bank gave me a pre-approved auto loan. There were auto loans available from other banks. There was a financing option from the car manufacturer themselves. And there was an OD facility against my account which I could use to pay for the car. I was also confused. I can see somebody nodding. You've seen a situation like this in your life as well. Yeah, I wouldn't be surprised. What do? Like most people, I also went to my financial advisor to consult him and ask him which is the most recommended option. Now, why is this? Why is this finance so difficult? Because for decades, the answer lay in a fundamental divide, a fundamental information asymmetry. On one hand, we have our financial companies and systems, which are the great engines of providing capital. These are built on legacy, stability, and risk management approach fundamentally. On the other hand, you have the users and the users' needs. Both of them have evolved, but they've evolved essentially as parallel silos. Finance typically tries to assess the risk in users and puts in processes and models to try and assess that and judge that and thereby make a product, which then is thrown open to customers for customers to go through the plethora of information and options to decide what is best for themselves, right? That's typically how it operates. And we, the users, therefore see financial companies as slow-moving dinosaurs. They're not really keeping pace with our needs. They're not really giving us exactly what we want, when we want it, where we want it, how we want it. That era, though, has been solved a lot through commerce and quick commerce. Now, if you look at that contrast, whether you're trying to book an Ola or an Uber to get out from this hotel in the evening, or you're trying to book something off a Big Basket or a Zepto or a Blinkit, right? What do? You throw up your own location. You throw up what your requirement is, what you want to buy, the specific product, the brand, the pack size, the ingredients to whatever level you want, and then the best option is provided to you, right? But in financial services, that bridge has not been crossed yet. But now, that earlier era of the silo between the financial services companies and the user, that is beginning to get over. The walls are beginning to come down. And one of the bridges that is finally truly connecting these two worlds is caused by artificial intelligence. So on that note, let us spend a few minutes on trying to decode how artificial intelligence is being used as a bridge in the financial services world. The first thing to understand here is that AI is actually a foundational shift. It is not just another piece of software. Previous tech like the internet or the mobile, etc., they essentially automated tasks or made a task delivery simpler. AI is not an upgrade on that technology. Essential difference is AI understands context. AI can read 1,000 loan agreements in the time that it took me to walk up from that chair to the stage. And not just for speed, but to find patterns that the human eye would miss. It can analyze market sentiment from the newspaper news headlines to social media and connects the dots between world events and understand the impact on your investment portfolio. And all of this in the blink of an eye. If you had to do it traditionally, imagine the number of people you would have to employ, the number of briefs you would have to give, the amount of time spent in sifting through all of this information and then coming up with recommendations. That is the magic of AI. Now let's consider this through different examples and different financial contexts. First, let's take a small business owner. Let's call her Priya. She comes from Jaipur, runs a vibrant spice business. Her dealings are largely in cash. To a traditional bank, she is invisible. But AI can translate her digital footprint, not just her growing online sales, but her glowing customer reviews, her consistent market attendance, etc. Take all of these inputs into a language of creditworthiness and trust that a new age financial services company leveraging that AI would be able to understand and act upon. Instead of seeing her as a high-risk borrower case as a traditional company would, the AI throws her up as a thriving entrepreneur. The result, someone like a Priya can now be offered a tailored loan for a new packaging machine, unlocking her growth. So that is how AI can truly disrupt lending. Let's take a different example of Vikram, who's looking to buy a car, like the example that I shared a little while ago. In, let's say, Sambalpur in Odisha. Standard rigid car insurance, the premium would be based on the car's model alone. AI, however, can analyze community-level data to know that red cars being driven in Sambalpur by similar types of owners with similar usage actually have a higher propensity for accidents than blue cars. Did you know that? That's actually a fact. And then AI generates a premium for Vikram's blue car that is 1,000 rupees less than if he had bought a red car. This is how AI can even influence insurance decisions. And now the same Priya and Vikram, if they have to look at investing, traditional investment options would give you, okay, this is the instrument, this is your risk-adjusted return, past few years of track record. Then the option, again, a Priya and a Vikram would be expected to sift through all that information and identify where they want to put in their investments. But AI can actually analyze all of this for them, overlay that with world events, country events, socio-political events, geopolitical events, everything that's happening, and actually predict what the investments for an individual should be based on their profile, their behavior, their life stage, their risk appetite, and their life goals. That is the magic of AI. For the first time, we have a translator of user information and data from the users to move out from a one-size-fits-all financial product, take it or leave it, to actually tailored products that are fit for purpose for the user. At Revolut, we do it like that. We are present across 40 countries, of which in 22 we're a bank, and 70% of our processes are run with inputs from AI. But one of the things that I have learned while doing this is an AI model cannot simply land like a spaceship and expect to operate. An algorithm built for Germany's data privacy would fail miserably in Indonesia, where the regulatory framework is completely different. An AI that has been trained on US credit scoring, as an example, where a man over-leverages his credit card to buy his second car, if that algorithm is replicated blindly in India, it can cause havoc if it is replicated here, where a farm-working woman may be applying for that loan to put her son through college. Right? This is where the human intervention and input becomes critical. We need humans to assess both sides, assess both the input and the output. As they say, garbage in, garbage out. So it's important to look at what are the inputs that are going into AI and monitor them, as well as contextualize and ratify the output that is being thrown out by AI before converting that into a decision and an offering. So the real innovation, therefore, is not necessarily in the base model. You have to visualize AI not as one giant tech brain for the world. That's not AI, but it's actually a network of intelligent humans who understand the heartbeat of their own communities, who are nurturing this AI technology and teaching that AI to understand that local behavior, the local data landscape, local regulations. That is the real innovation that can truly write the next future of inclusive finance. Now, as this new future is being built, who is building it? This is not where I'm going to get into a whole battle of startups versus institutions narrative. That is passé. The new era is actually one of powerful collaborations. To use a Navy analogy here, the fintechs are like new agile frigates, which are leading a naval formation. They are at the forefront of bringing innovation, the hunger, the ability to leverage all this AI that I've been speaking about, and pivot overnight. But scale, trust, and robust governance cannot be thrown out of the window. Those do still come from established institutions and are kind of like the solid carrier ships part of the Navy unit. And yes, they're also leveraging their own AI to do their job better. An example is if you've tried sending money overseas, any of you tried sending money overseas? Yeah, there you go. So what happens, this is a perfect example of such collaboration. A fintech company like Revolut, for example, we use the tech and the AI for instant currency exchange at super low fee structures. We offer that through a slick mobile app experience to you with real-time tracking. And a bank sits at the back end to actually settle the funds from the sender's local account to the recipient's international bank account. That is how innovation is offered when the two come together like a well-oiled machine to offer solutions to the customer. And what is lubricating these common operating systems is AI. Now, putting a woman's lens on this, it wouldn't be complete without doing that and without talking about peeling the onion of bias as we do all of this. As we're building it, we must build it with our eyes wide open to be intentionally inclusive. Which is where, like in all Thai conventions, we actually have a sign language operator to translate everything that I'm saying for people who may not have heard it directly. That is truly putting your actions where your words are and making it inclusive for everybody. Even in this usage of AI, it has to be inclusive. And this is where I believe I'll call out to all the women in this room, our perspective is not just valuable, it is critical. Because inherent bias works like an onion. You peel one layer, you find another. The first layer is actually in the AI algorithms. It is caused by historical data that underrepresents women and minorities, leaving an open risk of AI learning and perpetuating old inequities. Like, how many women entrepreneurs in this room? You tried applying for a working capital loan? Have you been asked for a male guarantor? Yeah, there, I can see those smiles, right? You know why? Because there happen to be a lot of shadow companies in India which are registered by male operators in the names of women in their families. So what traditional institutions would do would be to ask for a male guarantor. Now, if the AI were to take that as an input and act on it, it would perpetuate the same inequity that a woman entrepreneur backed by a male guarantor is creditworthy. That is not inclusive. So what is important is to keep our eyes open as we build for this to correct such anomalies by feeding into the AI to look at things like gender as a proxy, an irrelevant proxy at that, and to look for actual substantive financial markers for a shadow company if that is the problem you're trying to solve for while assessing creditworthiness and risk. That is how you will build inclusive AI. Now, let's peel that layer back once more. You find the second layer of bias. This is bias in leadership. The teams that are deciding which problems are worth solving, which markets are worth entering into, which rules are worth configuring, are often very homogeneous in nature. And if the room building the AI doesn't reflect the world, the AI won't either. So the teams that are building for this, that room of minds, needs to have representations from, or at the very least take inputs from, a cross-section of all genders, all ethnicities, all socio-economic backgrounds, geographic diversity, age mix, life stage diversity, and I will go so far as to say even people with different physical and cognitive abilities. Now you peel this layer back once again. You will find the most stubborn layer. Bias in everyday choices of even a heterogeneous group assembled in a room. Unspoken assumptions, unconscious preferences that seep into everything, from our everyday decisions to product design, marketing, customer service, you name it. Let me again share with you my own personal example from that car that I was sharing. After I bought the car and drove it out for the first time to a restaurant, had to hand it to a valet, I subconsciously preferred to hand the keys over to a male valet rather than a female valet standing there. Yeah, I can see some smiles and nods, right? Was there a difference between the level of ability of the two valets? Likely not. Maybe the woman was a better driver. I pride myself on my driving skills. But at that time, my subconscious bias led me to prefer the male valet to hand over the keys of my new car too. Can we remove such biases entirely? That's a utopian idea, frankly. But you know you're on the right path when you're recognizing where your biases are hiding and choose to confront them anyway. It is our responsibility as architects of a new era to keep peeling the layers of the onion. And as we are building businesses, while we ask who are we building for, it's equally important to ask who are we leaving out. That is when we will ensure AI is not just intelligent, but also fair and equitable. So, in conclusion, as we bank on AI, we're not just betting on technology. We're betting on our ability to connect two long-divided worlds of financial services and the user's needs. We're betting on our human wisdom to globalize the tools and teach AI to be what AI should be. We're betting on building a new spirit of collaboration between the agile and the established. And most importantly, we're betting on our collective courage to build systems to see the world not as it has been up to now, but as it should be, inclusive, progressive, and boundless. This is our moment to lead that change. Thank you. Do I have time to take questions? There's somebody who has his hand up. Please go ahead. I can hear you if the others in the hall can, or else you can give him this.
Say e-commerce companies, they have data regarding purchases and all that, right? And that can be used for creditworthiness check and all that. So say Amazon, there are a lot of people buying from Amazon and they have data for last 2-3 years. Why can't Amazon get into banking and give other banks run for its money? Point number one. Question number two is you were doing money transfer through and the bank is sitting at the end. Why are you not using blockchain just? I don't know, maybe some technical reason or some regulatory reason. But why not blockchain for transferring money, which is very, very low cost?
The answer to both your questions are yes. The first one, yes, a company like Amazon, why can't they? They can, and not just that, I think they are. A lot of the companies are thinking about intelligence use of data that is available to them to make the most optimal decisions for the customer. So that's happening, and that's evolving as we speak, okay? On the second one, again, blockchain, it's being actively used. So blockchain is not a replacement to either the fintech or the bank. Blockchain is, again, a technology. When I meant that this is being reinvented, the technology is being reinvented. Both banks and fintechs are actively looking at using blockchain as a technology when the money passes through. So what I was saying is the bank is the container of where the customer keeps their money. The fintech is the one that is giving the pricing and the customer experience. Blockchain or anything else can be the technology which connects the two. AI is the one that gives the intelligence to be able to do this in a manner that is relevant to the customer. That's how all the pieces of the puzzle fit in to give a truly tailored experience to customers. Any other questions? Thank you. Thank you so much.